What's going on, my YouTube family? My name is Francisco with Covenant Dispatch LLC, and welcome to my YouTube channel. So in this video, as you can see in the title, I'm basically going to share with you guys a gem. I want to share with you guys a 3-point strategic system that you can use, a blueprint, if you will, that you can use to negotiate good rates for your carriers, right? So depending on what kind of freight dispatcher you are, the variables in negotiating a good rate will change or differ. And I'm going to explain that a little bit more in detail as I move along in this video. But let's just jump into the blueprint. The number one point that you want to pay attention to is your targeted rate per mile. I'm going to get into more detail about it later in this video, but that's number one, your targeted rate per mile. Number two is your deadhead mileage in that load. You want to pay attention to that as well. And then number three is dispatch pay. Now, the reason why I spoke about how it depends on what kind of freight dispatch agent you are is because you could be a freight dispatch agent that works as an employee under a trucking company, and because you are an employee, there are specific variables that you won't have to take into account when negotiating a load or a rate for your carrier that an independent freight dispatcher would have to pay attention to because they are a separate entity. They're self-employed. They are an entrepreneur, and I explained it in one of my previous videos. What you have to understand is, as an independent freight dispatcher, you're a separate business. You're an independent contractor that provides administrative services for a carrier, but you're a separate entity. You're not an employee. You're a 1099 contractor. Whereas if you're a freight dispatch agent who works for a company, you are an employee. So one of the variables that you have to pay attention to as an independent freight dispatcher is dispatch pay. Whereas as a freight dispatch agent working under a company as an employee, you don't have to worry about dispatch pay because you're getting compensated by your employer. So it doesn't matter. That's not something you have to take into account when negotiating a good rate for your carrier. And so I make these videos geared towards independent freight dispatchers. So this blueprint, this 3-point blueprint, is going to be useful for those who are independent freight dispatch. And so now let me get into a little bit more detail about what these 3 points are. First of all is your targeted rate per mile. So first of all, a rate per mile is the rate or the amount that you're getting paid for that load per mile, right? And the way you calculate this rate per mile is you take the total amount of the rate that the freight broker is showing you as a dispatcher or presenting to you, whether it be on the load board or whether it be via email. You take the total amount of the rate for that load and you divide it by the total amount of loaded miles for that load. So let me give you guys an example. Let's say there's a load leaving from Philadelphia, Pennsylvania to Tallahassee, Florida. Now that's about 1,000 miles, right? Give or take. The total amount of miles on that trip is 1,000 miles, right? Let's say the freight broker says, hey, I'll give you $2,500 for that load. Well, to get the rate per mile, you're going to take the total amount of which is the rate, $2,500, and you're going to divide it by the total amount of loaded miles, which is 1,000 miles. And if you divide that, you get $2.50 per mile. That's your rate per mile. Now, when you're getting set up with a carrier as an independent freight dispatcher, you have what you call a carrier packet or a carrier agreement, or whatever you want to call it, that lays out the stipulations of your agreement between you and the carrier. Now, somewhere in there, you're going to want to ask your carrier, hey, what's your targeted rate per mile? Because your targeted rate per mile is going to act as a standard when you go and negotiate rates for that carrier, okay? So that's number one. Number two is deadhead mileage. So deadhead mileage is basically mileage that's allocated without any commodity or any load in the trailer. So using the example that I did earlier, let's say you have a carrier that's in Lancaster, Pennsylvania, and they have no load. But the load that they have to go pick up is in Philadelphia, the same load going to Tallahassee. So from Lancaster, Pennsylvania to Philadelphia, Pennsylvania is about, give or take, I could be off a little bit, but about 60 miles, let's just say. So that mileage that the carrier allocates from Lancaster to Philadelphia to pick up the load is called deadhead mileage because there's no load on their truck. They're not getting paid for it. Sometimes they even call it a dry run, right? There's nothing on there. And so that's deadhead mileage. That's one of the variables you want to pay attention to when negotiating a good rate. And then lastly is dispatch pay. Now, dispatch pay, most dispatchers Independent freight dispatchers charge a percentage based off of the truck's gross for the week. So if a truck grossed $5,000 for the week and you charge them 10%, well, then you get paid $500 as the independent freight dispatcher. But it varies depending on who you are and what you charge. But that's what dispatch pay is. Now, how you want to do this is how you utilize this blueprint. When you go to negotiate a good rate for your carrier, the number one thing is that you have to pay attention to is the targeted rate per mile. So when your carrier gives you a targeted rate per mile, you know that you can't go under that targeted rate per mile because that's the target rate. You go under that, you're gonna disappoint your carrier and you might lose them eventually. So you always want to keep that as a standard. So now when you're going to book a load, you have that as a standard. So let's say their standard is $2.50. Well, now you know you have your standard rate and you're always keeping it at that rate, and you're going to keep them satisfied as a carrier. That you'll keep them satisfied. Next is your deadhead mileage. So strategically, somehow you're going to have to allocate those deadhead mileage into the total amount of the rate, so that way when they get paid, you're not let me rewind. Your deadhead mileage you have to pay attention to, because when you have your standard rate per mile, let's say in the example that I used, 1,000 miles from Philadelphia, Pennsylvania to Tallahassee, Florida, 1,000 miles. Well, if they're willing to pay $2,500, that's $2.50 per mile. But because your driver has to drive from Lancaster, Pennsylvania to Philadelphia, Pennsylvania, it's going to knock off some of the mileage and it's going to throw off the rate per mile if you add the deadhead mileage into the whole equation, right? Does that make sense to you? So third of all, you're going to have to add into account dispatch pay. So your dispatch pay, because you're an independent freight dispatcher, you're getting paid for the amount that you gross for that truck. So if you gross, let's just say every load that you book, you're always meeting that $2.50 threshold. At the end of the week or whenever you invoice your carrier, when they go to pay you, they're going to be dipping under that targeted rate per mile in order to pay you. So as an independent freight dispatcher, a good way to negotiate rates is to understand, okay, $2.50 is the targeted rate per mile. Now, I might want to start negotiating negotiating loads and rates for $2.70 per mile, so that when I go and invoice my carrier, they're paying me, but they're not dipping under that targeted rate per mile, right? And so depending on who you are and how you book your loads, everybody's going to have their own different strategic way in doing it. But if you follow that blueprint, you're going to relieve so much stress off of yourself. Now, I know there's tolls, there's mountains, traffic, there's fuel surcharges, there's commodities, and there's a bunch of different variables. But I promise you guys, you're going to learn these things as you go. I wouldn't have the capacity to sit here and try to explain all of those different variables because everybody's different. You might have a carrier who's in Florida, right? That region, in that territory, that area, that region is different from, let's say, Ohio, or let's say, California. Every region has its own different variables. And so it really just depends on what kind of equipment type you're dispatching and what region that they're in. That'll determine some of those different things like tolls and whatnot. But again, you pick these things up and learn them as you go, and you'll develop your own strategy. Now, I do have a step-by-step way and how I use this blueprint to negotiate my rates for my carriers. But unfortunately, I'm not going to share that video on here because it's going to be implemented into my freight dispatch course, and people pay for that, and it'd be unfair for them for me to just post that. But I do have the link for my freight dispatch course under this video. And just as a heads up, I will be doing a freight dispatch course giveaway February 25th at 8:30 p.m. I'll release more details in my next video. So if this video helped you in any way, if you like this video, please like, comment, share, subscribe, and hit that notification bell for my next video. In my next video, I'll share with you guys the details on my freight dispatch course giveaway so that you guys can enter into it. But you got to be sure to hit that notification bell so you see the video. But I'll see you guys in that next video.